Good afternoon, everyone. Thanks a million again for joining our mortgage webinar today, where we will be discussing the very supportive First Home Scheme that was launched back in July 2022. Just for your own notice, that this session will be recorded and we will be sharing it post the webinar. So it will be available to all people that registered for the webinar over the last couple of weeks. My name is Margaret Barrett. I'm Managing Director of Mortgage Navigators, and we are a mortgage brokerage firm serving customers across Ireland with offices based in Cork and Dublin. We offer our clients a free mortgage journey from, I suppose, our very initial assessment to full drawdown, and we deliver this in a no-nonsense, jargon-free manner, and you will be supported by a very easy to use online mortgage application platform, and we will have a fully dedicated mortgage team with you on every part of your journey. Some of that team members are with me today. Karen Coleman is our Senior Credit Manager in Mortgage Navigators, and Ciara Fogarty is also on the call, who is our Senior Case Administrator. So we look forward to engaging with you all over the coming weeks and months ahead. As a first-time buyer, folks, we completely understand that I suppose the struggles you are having with trying to get your footing on that very elusive property ladder. So making sure, I suppose, that you are very fully familiar with all the incentives and support schemes that are available to you from the outset is hugely important. So with that, we are absolutely delighted to have Michael Broderick join us today. Michael in February 2022 was appointed CEO of the First Home Scheme. For those of you that don't know Michael has a significant financial background, having served in many senior roles with the NDFA and NAMA from 2006 to 2018. And from 2018, he was appointed by the Minister of Finance to serve in many senior roles in the Home Building Finance Ireland. So we're delighted to see him lead out in this very important support to our first-time buyers in the First Home Scheme. Michael will give us a very informative presentation, folks, today, and we will open the webinar at the end of that presentation to a full Q&A. I've opened a Q&A box, so please use it and input any questions that you have. No question is ridiculous or silly, you know what I mean? We're all learning what the First Home Scheme is, so please do ask anything that you feel is relevant. With that, I'm now going to hand you over to Michael, and we look forward to engaging with you all post the presentation. Thanks, Michael.
Thank you very much, Margaret, and good afternoon, everybody. I'm delighted to have an opportunity to speak to you. Hopefully not eating up too much of your time over lunch. But look, over the next 20-25 minutes, I'm going to do a presentation at a high level in relation to the First Home Scheme, how it might help you, how you might go about applying for it, what it can do, some of the terms and conditions around the scheme itself, and generally how it actually operates. There is some confusion out there in the market. There is a little bit of complexity around the scheme, but what we're trying to do is trying to make it as easy as possible for, well, firstly, the people understand it, and then secondly, if people want to apply or avail of the scheme. So there are a number of different assistances there to help with that, including a helpline, an email address, etc. And obviously, Margaret and her team as well are there if you need any advice on the mortgage side of the business. So with that, I'm going to go into the presentation, and I suppose I'm going to start with the obvious question: what is the scheme and what can it do for me? So as a customer, as somebody who's looking to buy a home for the first time, you know, we are very conscious that people do have a gap. You know, it's very difficult to save and continue on living, I suppose, on a daily basis. And oftentimes what we find is people have a gap between their deposit, the mortgage, and the cost of that home that they're trying to buy. And that's where the First Home Scheme comes in, because the purpose of the scheme is it's not to replace your mortgage, it's not to replace debt, but it's there to bridge a gap. And that is the gap between your mortgage deposit and the cost of your home. And I'll talk about that a little bit as we move on. Just quickly to give an overview firstly before I do that, because again, there's often confusion about, you know, what the scheme is and who's running it and all of that kind of thing. So it's not a state agency, it's not a state enterprise. However, what we are as a private company, are often known as a DAC, but our shareholders are the Minister for Housing, AIB, Bank of Ireland, and PTSB, and also to include Haven and EBS there. So you can see that the people who actually own the company that we actually operate are all very serious players in the Irish market, in terms of be it the state or the three main banks, and also including Haven and EBS, as I say, as part of the AIB group. The scheme is open to other lenders to come and join. So if you're an authorised lender in the Irish market, then they're open to joining the scheme. We are in discussions with a number of different other providers with the hope that they will actually join. So my hope would be that ultimately all lenders in the Irish market would be in this scheme, so that people, it doesn't really matter then what lender you go to, you'd be able to avail of the scheme if you so wished. Few things that it's not. There's a lot of false information out there on social media. I'm sure you're aware that, there are a lot of so-called experts, with experts in inverted commas. So some of the things that have been, propagated out in social media is that it's a second mortgage. So it's very definitely not a second mortgage. And as we go through the presentation, I hope to demonstrate to you why it's not. The second one is that, constantly get asked is, will the government own part of your home? Now, I know it's often referred to as the government shared equity scheme. So to be fair to people, it's an obvious question, but the reality of it is the government will not own part of your scheme, or part of your home, I should say. The scheme, as in the first home scheme, if you avail of the scheme, will take an equity share in your property. But in the same way that the bank take a charge over your home when they give you a mortgage, it's exactly the same here. And in fact, what we do is we take what's called an inhibition, which is basically a second charge after the bank, but it's even in a less powerful position because we don't have recourse to the customer. We just have recourse to the property if all things go pear-shaped. We won't be coming out inspecting your house. The government won't be inspecting your house, as I'm often asked. So think of it as I suppose, for the purpose of this example, even though I've said it's not a second mortgage, but just think of it as another lender being involved in your property. And that really is what it is. It can be used in conjunction with the Help to Buy scheme. And those of you that are out there in the market looking to buy your first home, and are first-time buyers, I would strongly advise that you check out the Help to Buy scheme if you're not familiar with it already. And again, I'm sure Margaret and her team can advise on that. It is money that you can get from revenue, in free money. You don't have to pay back taxes that you previously paid. Unlike the scheme, which you do have to pay back, and I'll talk about that later, the Help to Buy is definitely worth checking out. And the key thing is it works very neatly with the first home scheme. So it is worth actually, as I say, checking out how the two of them might work together for you. Just some background to the product. So the first product we came out with in July 2022 was a first-time buyer product for people looking to purchase a new home in an estate or development. Then in April of last year, we also introduced a product for people looking to purchase the property they're in if their landlord has issued them with a notice of termination. Now, what a notice of termination is basically the landlord telling you, you must vacate the property because I want to sell the property. If you get a notice of termination like that, you can use the first home scheme to actually put your funding package together to put an offer in for that property. That's the property that you're renting. So that's the only scenario in which the first home scheme can be used to purchase a second-hand property, and that's the tenant home purchase scheme. And then as of September of last year, we also introduced a self-build product. So again, in the same way, if you're buying a house in a development and you're building a house, you can use it. So in that scenario, it'd be where you have a gap between your mortgage deposit and the build cost of your new home. Then you can also use the first home scheme in that scenario. You must already have a site, so you can either purchase a site or being gifted a site, which is often the case. We do not provide funding for the site. So that's something you must have before you come to us looking for funding for the build costs. There is one very important cohort of people that I left out there, and that is people under what is known as the fresh start principle. So these are people who are either divorced, separated, or have broken up from a long-term relationship. And what we define by a long-term relationship is a relationship where there was a family home, there was a PDH, principal dwelling home involved. So basically, let's say a couple, it doesn't really matter. It doesn't matter whether they're married or not, but a couple have purchased property between them. That relationship unfortunately breaks up. One of the individuals moves out of the property, or maybe they'll both move out, sell off the property, or one will move out if there's kids involved, and relinquish all control on that property. If you do that, then you can avail of the first home scheme under the Fresh Start principle. And while that's a small cohort of customers from our perspective, it is a very important cohort because there are people who, many of whom we've met and whom have thought they would never have an opportunity again to purchase a home, and they can actually do that with the availability of the first home scheme. So how do I qualify for the scheme? I'm just going to get into some qualification criteria now and rules around the scheme. So the minimum equity facility under the scheme is 2.5% of the property value, or €10,000, whichever is greater. There is an interactive calculator on the First Home Scheme website, so that will actually allow you to go in there, put in your details, and figure out very quickly how much it is you might be able to avail of under the scheme, and see if that will actually breach the gap for you. The maximum equity facility that you can avail of is determined by one of three things. So firstly, the price of the home. Secondly, whether or not the customer is availing of the Help to Buy scheme, and I'll talk about that a little bit later on. Secondly, the local authority area in which the property is located. So there are price ceilings in place right across the country in each local authority area. And the purpose of those really is to ensure that this scheme isn't contributing to house price inflation, because it's not in your interest, or it's not indeed in our interest, that house prices are going up on the back of this scheme. So this scheme is meant to bridge that gap, but it's not meant for builders or developers or estate agents or whomever it might be to take advantage of that and increase profitability. And in fact, we don't really see any of that. We've checked and we've done a study on it. And in fact, what we're seeing is that builders and developers are keeping the house prices below the price ceilings in a lot of places to ensure that people like yourselves can avail of the scheme and end up going off and buying their property. In terms of how the scheme itself might work, oftentimes I give a very simple example where a couple or an individual is trying to purchase a property for 300,000. Let's say they have sufficient income to be able to generate a mortgage of 200,000, and they obviously have to have 10% of the 300,000 as a deposit, so they have 230,000 available to them. But you can see the property price is 300, so they're short 70,000. So that's the gap that the First Home Scheme can bridge. It can bridge the gap between their deposit, mortgage, and the cost of the new home. And there are work examples on our website if you want to go on and have a look and see exactly how that might work. And I should say, probably if I haven't already at this point, that for all of the information relating to the scheme and everything that I'm giving here today, and indeed much more, is available on the First Home Scheme website. All of the application process, which I'll talk about a little later on, is also undertaken through the website. So anything you need to know or want to know about the scheme is on the website. There is also a helpline and an email address there, so you can actually call the number, talk to a real person, not a bot, and actually they will answer any questions that you may have relating to the scheme. These are the price ceilings, and they apply, as I said, across the country. Just on the price ceilings themselves, they get reviewed twice annually. So they're reviewed half year and they're reviewed again at year end. So at the moment, in fact, we're just undertaking the half year review. So we expect that the outcome of that will be published, will be announced the first week in July. So we anticipate that there will be some price ceiling adjustments. And there will be some increases, hopefully in the lower counties in particular. So that's something to keep an eye out for. And as I said, they will be available from the first week in July. And when you go on to our website, all of these are available on that. And you can put that information in along with the local authority area in which you're building and are buying. And then the calculator, interactive calculator, will give you the amount of funding that's available to you from the First Home Scheme based on the details that you've issued. So how does the equity share work? Well, I suppose the first thing I just want to say about it is that if you apply for our scheme, we will not be asking you about your salary, your credit grading, or anything like that. And the reason we don't ask you for any of those details is that because you have mortgage approval from one of the 5 banks that I mentioned earlier, they will have done all of the underwriting on our behalf. So when you come to us and you have your approval in principle from that mortgage provider, we will then know they have done the underwriting. They're aware that you're probably going to apply for the First Home Scheme, and we will take that underwriting as being done, that box ticked. So from the time you apply on our scheme on our website, we can give you an approval in principle, or an eligibility search, as we call it, in roughly 2 to 3 days, but an absolute max of 5 days. So our process is very streamlined. It's online for 99% of it, and it's also very quick. And it does actually work. And those are the timelines, because we've been running now for 2 years. We keep an eye on it all of the time, and the turnaround is generally very quick. In terms then of how the equity share works, so as previously mentioned, the amount that we can provide depends on a number of things. So firstly, if you are availing of the Help to Buy scheme, we can provide you with up to 20% of the value of the property that you're either trying to purchase or build. If you're not availing of the Help to Buy scheme, then we can give you up to 30% of the value of the property or home which you're trying to build. Oftentimes, you may not be able to get the full 30% in your Help to Buy. So what we advise at that stage is talk to your financial advisor, talk to Margaret and her team, and determine and figure out for you what is the best option for you, whether you're better off going for the 30% of the first home scheme, or you're better off taking the amount of the Help to Buy that you can get and then 20%. And there's no straight answer for that, because it will vary depending on the individual, the couple, and your circumstances. And that's why we say go talk to your financial advisor, and they will advise you in relation to which is the better option for you. So this example here, what we're saying is, and don't worry too much about the prices. I know you can't buy a house generally for 200,000, but we're just keeping the numbers relatively simple for demonstration purposes only. So let's say on day one, I look to buy a property. The property is costing €200,000. I'm looking to get 20,000 of that from the first home scheme. So in other words, I have €180,000. I need 20,000 from the first home scheme to make the 200. That's 10% of the total value of the property. So day one, first home scheme gives me 20,000. So let's say a number of years down the road then, and I haven't made any repayments or redemptions in the meantime, and say 10 years, 15 years later, I want to repay the equity amount that I drew down on day one, the 10%. So at that stage, my house has now increased in value by approximately 50%. So it's now 300,000 in value, which is fantastic. So the amount that I owe the first home scheme is still 10%, but it's 10% of the value of the property. And this is an important point. So it's not the amount we give you in day one, it's the equity percentage we give you in day one. So if we give you 10% in day one, when you come to redeem it, it's 10% of the value of the property at that point in time. Equally, if it's 20%, 15%, 8%, whatever the percentage is, that's what it is, and that's how much you owe. So in that scenario there, if your property has increased by 50% to 300,000, it's now 10% of 300. So you actually owe us €30,000 as opposed to the 20 we gave you in day one. But equally, if house prices go down, and we all hope they won't, but if house prices go down and that property is now only worth 100,000, well, then it's 10% of the 100. So you owe us €10,000. So you can see there that we take the risk on property price increase and decrease. And I know people often say to us, well, that's a bit unfair. If my house price increases in value, then you get part of that uplift. And we would argue that, look, on day one, we give you 10% of the value of the property. So, when you come to redeem, and that's entirely up to yourself when you do that, it's only fair then that you would give us back 10% of the value of the property at that point in time. And that's the bit about the equity share. We have a share in the value of your home. And that's how we go between 20 to 30 or indeed to 10, depending on whether or not house prices increase or decrease. So just some of the scheme details then. There is no interest charge. And I did say at the outset that I would talk later about how this was not a mortgage. And it's not a mortgage because you might say, well, there's no interest charge, but there is an annual service charge. And yes, there is. And that service charge kicks in from the beginning of year 6 onwards. And the purpose of that service charge is basically to cover the costs and the overhead of the running of the scheme, because there's quite a bit involved in it. So that goes to the cost overhead. That percentage between years 1 and 5 is 0, no payment. Between years 6 and 15, it's 1.75%, and so forth. 16 years to 29 is 2.15. So all the way up to 30 years, where it increases to 2.85%. And the key thing about that is that when that falls due, you do not have to pay it at that point in time. Again, a key difference from a mortgage. So what we will do is we will contact you at the end of year 5. We will say you're coming up to the beginning of your start of year 6. Do you want to pay the service charge as it falls due, or would you like to roll it up? And you can say to us, do you know what? I've kids going to college. I've changed job recently, or I'm changing job, or whatever. I really not in a position to pay the service charge at this point in time. And we said, that's fine. You can roll it up. But the key point here is that you roll it up on a simple interest basis. And for those who don't know what I mean by that, is you don't have to pay any additional cost because you don't pay it when it falls due. So it's not like, if you have a loan and you miss a payment, then you're paying compounding interest, so you're paying interest on interest. That does not happen here. And while it does have to be repaid, It has to be repaid before when the in order for the equity facility to be fully redeemed. It's up to you entirely when you actually do that. In terms of the principal we gave you, so that bulk amount, that lump sum we gave you on day one, there are 4 scenarios when that must be repaid. So the first one is the sale of the property at any time post purchase. So that's the same way as your mortgage. So if you sell a property 5 years into it and there's 20 years left in your mortgage still, or 21, whatever it might be, you obviously have to repay your mortgage at that point in time. And that's the same with the first home scheme. So if there's if you're selling the property, moving on to either a new home, different home, moving parts of the country you live in, whatever it might be, you do have to redeem the first home scheme at that stage. The property is no longer your principal private residence. So in that scenario, you're fortunate enough to be able to buy another home. That's now become your PDH, or your principal dwelling home. And you want to rent the property that you had. That's absolutely allowed. But what you must do is you must repay the first home scheme before you do that. So it's not intended for rental properties. The customer remortgages with a lender who's not a member of the scheme. So if you remortgage with a lender who's not in our scheme, you must also repay it. And the theory behind that is that the members of our scheme are putting in 50%, the bank members of the scheme are putting in 50% of the funding to the scheme. So it wouldn't be fair if somebody else rocks up and says, sure, I'll take advantage of that now and buy you out of the scheme, and you can just pay me back in terms of mortgage lending or mortgage repayments. So in that scenario, now you can refund or you can refinance within the scheme. So in other words, so let's say, for example, you were with Bank of Ireland and you want to move to AIB or PTSB, or indeed vice versa. You can do that, and you can still hold on to the first, because all of those banks are in the scheme. So you can refinance within the scheme, but not outside the scheme. And the final one then is the death of the owner or owners, and the property is subject to probate. So that's where an individual, or in the case of a couple, the second person passes away. So the point in terms of repayment of the equity, so that demonstrates, what that demonstrates is that you do not have to repay the equity at any particular point in time over your life in that home. So in the ideal world, we'd be hoping that most people will repay between years 10 and years 15. But in reality, you could live in that house for the rest of your life and not make any repayments in terms of either the equity or the service charge, because you can roll up the service charge. But what happens is when you pass away, and if it's a couple, the second person passes away, your estate at that stage must immediately repay the first home scheme, the equity, and indeed any service charges that you have rolled up. So in that scenario, if you live your entire life in the house, not make any repayments, which you can do, and you pass away, and let's say you leave your home or house to your kids, well, your kids will have to repay the equity that's whatever's owed at that point in time, plus any outstanding service charge. So they're the 4 scenarios where you must make a redemption. Other than that, is entirely at your decision or your timing, as to when the equity is repaid. There is no fixed repayment dates from the first home scheme saying you must repay this in year 5, you must repay that in year 10, whatever it might be. And again, that's a key difference, I would suggest, from a mortgage. The other point I should make is the service charge. Those rates that are set out there are fixed for the life of the product. So it doesn't matter whether interest rates go up or go down, that's what you're going to be paying as long as you have the facility, as long as you have the first home scheme equity facility drawn down. So back to the point, the key point here is that the equity can be fully or partially redeemed at any time. So if you want to make a redemption, you must get a valuation. We have an approved list of valuers. You apply through their online portal. We won't know what valuer is appointed, and we've no control over that for independence purposes. So you'll go off, you get your valuation. The one thing I'd say is, in relation to that valuation, if you disagree with it, or indeed if we as the first home disagree with it, there is a process which we can go through where a second valuation can be gotten. And indeed, if you don't still agree after the second one, there is a final arbiter that's appointed by the Society of Chartered Surveyors, independent of us also, who will actually make a binding decision for both parties. So there is a very fair and open and transparent appeals process there if you don't agree with the value. But let's assume everything is good and the value is agreed. and then it's whatever percentage is outstanding at that stage. And you might only want to pay back 10,000, you might want to pay back 20,000. There is a minimum repayment of 5,000 because obviously we don't want somebody rocking up with their piggy bank or with a couple of £100. There is a cost every time you do that, and you don't want to be doing that either because you do have to get a valuation. Now the valuation is valid for 12 months, and during that 12-month period, you can make 2 repayments. There are annual statements. You get an annual statement from us in relation to equity facility you have and how much is outstanding. There's also a helpline email query. The deployment phase for the fund is roughly 3 to 4 years, but look, we're already running low on cash and we've had to get an additional injection recently from the banks and the state. So there's been an additional 80 million put into the scheme in the last 2 weeks, which is good because it means the scheme is getting used, and certainly the banks and the state are very supportive of it. So hopefully we expect certainly to be continuing on long into the future. Security for the equity will consist of an inhibition, and it will fall second to the senior charge held by the mortgage holder. Now that relates back to what I touched on earlier. So when you get a mortgage from the bank, they will take a charge over your home. It's still your home, but they will just have a charge on it. So let's say for whatever reason, repayments stopped, etc., and things went very badly wrong for everybody. In theory, the bank could actually repossess your home. We will have a second charge behind them if that doomsday scenario happened, and we hope it won't happen for anybody. But if it did, if there's anything left then at that stage, after the bank have taken their repayment to the mortgage back, we will get whatever's left over and we take what was owed to us. And at that point in time, if there's anything left, then the customer gets the rest. But look, that's in a doomsday scenario, which we don't anticipate, and we certainly hope doesn't happen. And we will be doing everything in our powers to avoid it. And bearing in mind that there's no fixed repayment dates, we anticipate that the amount of times that would happen for the first home scheme are almost non-existent. And we certainly hope that to be the case. So how do I apply? Well, as I mentioned at the outset, everything relating to this scheme, with the exception of the contract at the end, is actually done online. So that's just a QR code there for our website, but it's firsthomescheme.ie. So if you go onto that website, all of the information, the local authority price ceilings and the interactive calculator are all available on the website. And also the full application process is undertaken on the website. Now the application, that's just a screenshot of the eligibility calculator, and you just ask for some basic questions. You're not asked for your salary, you're not asked for your name, you're not asked for your credit grading, anything like that. That's irrelevant to us. You're asked for, is it a single joint application? Is it a build, a private development, or a self-build? What local authority area is it in, and what's the cost? And then, you put in your details around that, and it'll provide you with an answer very quickly. In terms of the application process itself, now I appreciate this looks very complicated, but I can assure you when you go through it, it's not as bad as it looks. So in essence, there's a couple of steps in it, and that's kind of what the squiggle is. So you must get, when you make the application online for the first home scheme, you must upload your approval in principle, which you'll have gotten from your lender, who will be providing you with your mortgage. So what we recommend is that you only make the application to the first home scheme when you've selected your mortgage provider. And look, again, if you're dealing with Margaret and her team, I'm sure they will shop around to get the best mortgage available for you. So it saved you doing all of that. So then you can literally go online and apply for the first home scheme once you've got that approval in principle from whatever bank or financial institution it is, as long as they're members of the scheme. You upload that as part of your full application, and once you upload that to us, we'll do a few basic checks on it, and this is where we'll come back to you within literally 2 days and provide you with an eligibility cert, which is effectively proof that we say you're approved for our scheme in principle. So once you load that eligibility cert, the bank will want to see that. Your mortgage provider will want to see it. So you load that up onto or bring it into them or send it to them electronically, whatever way you want to do it. We'll provide it to you electronically. It'll be a PDF document. So you send that on to your bank. The bank will review it. And then based on that, they now know that you're going to plug that funding gap that you have with the first home scheme, and they will then provide you with a letter of offer. We've then asked that you upload that letter of offer back onto our portal, which you'll now have because you have an account with us. We will review that. That takes a couple of days, again, 5 to 6 days max. And that then will cause a contract or customer agreement to be issued to you. So that's the first hard document you get, or first piece of paper you will get from us. And it will also be issued simultaneously to your solicitor. So your solicitor will go through it on your behalf. you engage with your solicitor. They'll explain all of the various bits. There are a few undertakings that you have to provide. So basically, they're the equivalent of sworn statements. So, for example, you're a first-time buyer. If you're availing of Fresh Start, that you've gotten rid of any interest in the previous family home. So just the standard qualifying criteria that you need for the first home scheme, you will be asked to confirm and provide confirmation in relation to those. Once that's done, the customer then will send that back to, or sorry, the solicitor will send that back to us. He will also send us a request drawdown. That's something he does, or she does. You don't have to worry about that. They will send that to us. We will issue funds to the solicitor's account in the same way that the bank will issue your mortgage funds to the solicitor's account, and your solicitor then will do the closing and the undertake and all of that on your behalf. So you will never actually get the first home scheme funds into your hands in the same way that you don't get the mortgage funding into your hands. Now, it's different if it's a self-build, but I'm talking about a purchase in a new development here. So your solicitor will do all of that work for you. You don't have to worry. There are a couple of documents you need to sign, and you need to firstly understand what you're signing, understand what they are, ask your solicitor if you have any queries or questions in relation to them, and then once you're happy, you sign them, and your solicitor then will send them back to us, and we will process the rest from there. So just some indication, I suppose, of the scheme today. This is just purely from an interest perspective. So we have over 10,000 registrations at this stage. We have 4,500 people approved for the scheme. So you can see why our funding, we're moving through it fairly rapidly. We have issued over 1,700 facilities. So that's 1,700 houses that have either been purchased or built using a first home scheme facility. And the average facility size might be of interest to people is 66,000. So that's the average amount we provide to customers. Average property price is 379,000. And again, you have to bear in mind, it won't be that high in every location, and in some locations it would be even higher, but that's our average. And the average equity share is 17%. So that's the average amount that each customer is getting from us. So bearing in mind that the max we can provide is 20% if you're using Help to Buy, you can see it's quite close to the max there. So it shows that people have a gap. And in this case here, the average one would appear to be about 17%, and they're using the first home scheme to plug that gap. So that concludes my presentation. Mags, I'll hand back to you there maybe, and if you have any queries or questions that have come in, I'm very happy to try and answer them there for any of the people that are online. I should, sorry, just finally say that that's the info line in terms of any queries people may have in email, or indeed the phone line there as well for anybody that wants to call and talk to a real person.
Michael, thanks a million. That was hugely informative. I think I learned one or two things along the journey as well. So thanks a million for that. We have a good few questions in, Michael. So will I just fire away at you?
Do please, yeah.
I'll start with the first one that came in. Let me just go up to the top. Is this service percentage of the property or the amount I took from the scheme? Let me see, can I make that? Is the service percentage of the property or the amount I took from the scheme? So it's a percentage of the property, I think, is what that question is leading to there, Michael.
I think what they're asking there, Margaret, is about the service charge. So the service charge is the percentage of what you drew down from us, not the value of the property. The value of the property only kicks in when you're making the redemption. So your service charge. So if you drew, so actually, just a quick example, if you draw 50,000 from us, roughly the service charge on that would be about €800 per annum. So €800 is not a small amount of money, but in the context of a 12-month period, it's not a huge amount either. And that, as I said, can be rolled up. So it's on the amount you draw down, not on the value of the property.
Perfect. What happens if we make a commitment to pay the equity within 5 years? No hidden charges would be involved if we pay within the 5-year period. Any minimum amount and maximum amount that can be paid for repayment?
Okay, so there is no penalty for paying within 5 years. Absolutely not. The minimum amount is €5,000. So, and you can make 2 repayments in any 12-month period. Now, obviously, if you owe less than 5,000, clearly we will take that as well. But the minimum amount, assuming you owe more than 5, is 5,000. And as I say, 2 repayments in any 12-month period based on evaluation of the property, and there's no additional cost for paying early.
Okay, perfect. Thank you, Michael. Next one, in relation to the Help to Buy, am I correct if I qualify for 68% loan to value from the bank? and get an additional 10% for the first home scheme, then I won't qualify for the Help to Buy, as they won't take the first home scheme into account of the calculations. That's correct. I think you have to borrow up to 70% of the purchase price to qualify for the Help to Buy.
Yeah, that no, I'm not being smart, but that's a Help to Buy rule. That's not our rule. But my understanding is that rule is there presently, but they might be looking at that, is also my understanding. I don't have any more information other than that. As I said, it's not our rule. That's revenue run the Help to Buy scheme. That's a revenue rule currently. But yes, that rule does exist right now. But my understanding is they may be looking at that, but I'm not aware of any details around it.
Yeah, perfect. Stay close to us, I think, is probably what we're saying here. Next question. If I buy as a single applicant and later get married, is my spouse added to the holder of this deal, and therefore upon my death, they would be safe within the property until their death?
Exactly. So as long as they put them on we have a process whereby they can be put on the title. So you just need to go through that. It's not complicated. You just need to go through that process with us. And then once they're on that title, and if you're unfortunate enough to pass away, well, I suppose somebody has to pass away first, but if you pass away first in that scenario, yes, they would be safe, and we're treating them the same as if they were there from day one.
Brilliant. Next one. My mortgage advisor said I need the first home scheme approval before I submit my mortgage application to contribute towards the funding. Should they give me approval first and then I apply for the first home scheme? I'll let you answer it, Michael. But
no, that's not the case, because we cannot give you an eligibility cert without the approval in principle from you. So the order is you must get your mortgage approval, your AIP approval in principle from your mortgage provider first, and then you apply for the first home scheme. Now you can commence the application process before that, but until you have the AIP, we will not issue with an eligibility cert or an approval. So the order is mortgage and then first home scheme.
Okay, perfect. And I suppose just to clarify there for that lady, Michael, do you need the property address for the property for the first home scheme?
We do ask you for a property address and the application process. Now, if you don't know, so let's say I'm very aware that when you go in to buy a home these days, you can't go in saying I want number 25, and they'll just smile at you and say, you'll be lucky to get any, never mind number 25. So very conscious that you may not know it's number 25. So what we ask you to do in that scenario is that you put in the development address rather than a specific unit number. So you don't need it to be number 25 or 21 or whatever it might be. If you just put in the development name, and even if it does change after that, you decide for whatever reason, or you don't get one of those, you can change the name with us. But we would much prefer if you actually know the property you're looking to purchase on day one. But it's not impossible to change the property address subsequently, but it causes delay, and it costs us and all of that kind of stuff. So you're better off to have that tied down, but it's not the end of the world if you don't.
Yeah, perfect. If I decide to move abroad for a year or two, what will happen?
No issue there. There is a revenue rule actually that will allow you to move abroad and rent your home for, I think it's 2 years, but I'm open to correction on that. So it's in line with the revenue rule. So what I'd advise is just check out what's on the revenue site around that. So because again, it's the same for the Help to Buy scheme and other revenue schemes. If you're moving abroad for work purposes, whatever, my understanding is you're allowed to actually do that under revenue, and we apply the same rule then. So whatever it is the revenue rule is, will apply in that case.
Perfect. Next one, Michael. My purchase price, in the question it says 5k, but I suspect it's 500k. But when I check the eligibility, I'm not eligible for that, showing only 425. My AIP is up to 400k. In this case, what should I do? Maybe wait a week or two. Is that?
Yeah, well, that sounds like that person is outside the price ceiling in the local authority area they're in. I don't know what area they're in, but so unfortunately they're outside the price ceiling, so they won't be able to use that scheme unless that price ceiling is moved up. But so that's why it's 500,000 for the Help to Buy scheme, and I think in that scenario there, the customer said was it 425 or
425?
425, yeah. So unfortunately, it's only intended. I suppose the logic, rightly or wrongly, here is that it's intended for the majority of first-time buyer type product, and it isn't, that's why we look at each local authority area in detail. It's not an exact science, and like what we try to do is get a happy medium between, making it high enough that people can use it, but not so low, or say high enough that people can use it, but yet, not to the point where it actually drives house price inflation. So it's always as I say, it's not an exact science, but sometimes, unfortunately, people do fall outside it then as a result.
Yeah, and look, if that client wants to reach out to us here in the brokerage, there may be an exception and the LTI available there as well, if it passes criteria. Next question, where can you find a list of new properties developments that are eligible for first home scheme funding in each county? I suspect them all, Michael.
Yeah, so this is not like the Help to Buy scheme where you do have to get it from an approved developer. We don't have any lists like that. So once the property price ceiling is being adhered to, it is any new property in any county in the Republic of Ireland. So that's why it's quite, as I said, we try to cut out the red tape. So there's no approved list of properties. Once it's a new property developed and delivered in the Republic of Ireland, it's within the price ceiling in that local authority area, it qualifies for the scheme.
Perfect. Can I decide to take the full 20% even if I have some money left over in my savings for my deposit?
The answer to that is no. I mean, what it's intended to do is bridge the gap. Now, we're also conscious clearly that people need to, a few quid to put the beds in and the sofas in and, dare I say, the widescreen TV and all of that. But look, so we're not going to be unreasonable. But I suppose this is not meant to be a second kind of mortgage, as you know. But look, if you're keeping aside 10 or 15K or 20K to furnish it or whatever else, nobody's going to lose any sleep about that. But like if you have 100 grand or 50 grand, and we've seen instances where that people are, applying for the scheme and they have 100K sitting in an account, you don't qualify in that scenario because it's not intended for people like you. You know what I mean? If this is really intended for people who are pushed to the edge of the collar in the context of not being able to bridge that gap. So if you have large chunks of money, and I appreciate that the definition of large can vary depending on your circumstance, but if you had 50 grand plus sitting in an account, well then probably it's probably not for you.
Perfect. We've time for a couple more. If I want to repay monthly, is this an option?
No, it's not an option. No, and what we suggest in that stage is, you set up a bank account or a Revolut account or whatever it is, and if you want to, and I understand why people want to do that because they save X amount per month and they just put it aside, but put it into one of those accounts, and then you can pay in lump sums, 2-3 years or whatever it is, 4 years down the road, whatever suits you. But no, we don't take payments we don't take payments. Now, I don't know, are they talking about the redemption? Are the full redemption amount, or are they talking about the service charge? Because we do take, obviously, the service charge falls due monthly, so that can be paid monthly, but not the actual principal amount. Yeah.
Oh, it's good to clarify that. How long do you need to be living somewhere if you get notice and want to get first home scheme for there? So I don't know about that, Michael, but so this is someone that's living in a house and want to reapply for the first home scheme, maybe? How long do you need to be living somewhere if you get notice?
I think that might be somebody under the tenant home
the
purchase
rent
scheme.
Yeah.
So there's no defined period, but what you must have is a lease, a proper lease that's registered with the RTB. We've had a lot of queries from people who clearly their landlords are not registered. So your landlord must be registered with the RTB, because the RTB also get the notice of termination. So the notice of termination is a very specific process, but it's not for you to worry about. It's for your landlord. They have to go through when they're issuing a notice of termination, and that includes them issuing it to you and the RTB on the same day. So if your landlord isn't registered, you're not going to be able to use the first home scheme. They should be, because they're legally obliged to be registered, but that's a whole different other matter.
Yeah. In a giant mortgage, do both of us need to be first-time buyers to qualify?
Yes. Both parties must be first-time buyers if it's been bought. Yeah.
Yeah. Can you use the first home scheme with a mortgage exemption?
Good question. No, if you get an MEP, what we advise then is you go talk to your financial advisor like yourselves, because in some scenarios you'd be better taking the exemption. Other scenarios you might be better availing of the first home scheme. So it's either one or the other. So our advice in that scenario is go talk to somebody like yourselves and let you advise them accordingly.
Yeah, perfect. Can the first home scheme be combined with affordable housing scheme and help to buy scheme?
No, well, sorry, affordable housing scheme. I'm not sure what they mean by that. So
I'd
there
say
are two.
the local authority housing scheme.
Yeah, no, yeah, well, see, there's two schemes that are quite similar in how they operate. There's the First Home Scheme and the Local Authority Scheme. So it's either one or the other, but not the two of them combined, because they both do more or less the same thing. Albeit the Local Authority one is for specific developments, which are managed and are, you know, in which the local authority have an interest in. So our scheme is really devised for private developments where a developer or builder has gone in and built, whereas the local authority one is for their specific developments that they will advertise or whatever. So no, the two schemes cannot be used together, but they effectively do the same thing, but just for a slightly different market.
With the Help to Buy scheme, yes, for both
Yes,
schemes actually.
yeah, most definitely you can use the Help to Buy with the First Home Scheme. Yeah.
Yeah. If I were to pass away and I'm the only person on the scheme, will my kids be forced to sell the house to repay the equity amount? I assume we're talking about younger children here now, Michael.
Yeah, I mean, well, sorry, not being smart about it, but they don't have to sell the house if they can raise the funding in some other way. But I think the question there is, if they don't have the funding, would they have to sell the house to repay the amount outstanding? And yeah, I mean, they're going to have to repay the equity outstanding in it. So whether they sell the house or they get a mortgage themselves, remortgage it, which is I'm sure is open to them, or whatever it might be, they do actually have to repay it. But there's flexibility in how they do that. And look, we're not going to be saying you need to sell the house the next day. If they indicate to us that they're, you know, they're getting a mortgage or whatever it might be in order to be able to hang on to the property, clearly we will work with them in relation to that.
Okay, will we take one more, Michael? It's just after 2.
Yeah, sure. Yeah.
Take one more. When I apply with a mortgage provider and get an eligibility certificate, what can I do when I decide to go with another provider?
If you go with another provider, you need to make us aware of that, because it will cause delays at drawdown time. If you go with another provider and you don't tell us till the last minute, it will actually delay you when it comes to drawdown, because, you know, we might think it's a simple case of just changing the name on the cert. It's not. There's a lot more that goes on behind the scenes, because we have to reserve funds against each of the lenders depending on which one they are. You don't need to worry about it, but just to be advised, there is a lot of work that goes on behind the scenes. So it's not just a simple case of changing the name on a form. There's a lot more involved. So it can delay your drawdown. So what we would say is, if you change provider, and absolutely entitled to do that, and what we'd advise in the first instance is shop around before you get the approval for us, and do your shopping then as opposed to later. But if it does happen later, that's possible, but you need to contact First Home Schemes immediately and make them aware that you've changed lender.
Perfect. Michael, we'll leave it there in the interest of time. Thank you so much for your time. We really appreciate you joining us today. The level of engagement will tell you that the amount of interest that's in the scheme currently in the market. Folks, there is some questions that we've left unanswered. We will send out maybe a Q&A sheet, actually, Michael, might be worth a while, that we'll send out after the webinar finishes, and we'll send out the answers so that everyone has line of sight of those also. The webinar will be recorded. It will be available for you to download you know, in the next hour, an hour and a half. So thank you all again for taking the time out of your lunch hour to join us. We were delighted to have you here today. And as I say, we at Mortgage Navigators would love to engage with you over the next coming days and weeks ahead. You can just log on to mortgagenavigators.ie and book an appointment there. And myself and Karen would be absolutely delighted to speak with you. Folks, thanks a million. We wish you all the very best of luck in your mortgage and home buying journey. Thank you very much. Thanks, Michael.
Thanks very much, everyone. Thank you.